Thank you, Amanda. I appreciate the introduction. Yeah, so as she said, I'm Jenn Clemo. I'm the Director of Nonprofit Leadership and Learning at NAO. And basically that means that I oversee all of our learning programs in addition to our resources and referral program, all the tools, handouts, guides, and activities that come out of NAO. And I oversee our help desk as well. So anyone can reach out to NAO with any questions that you might have about your nonprofit governance or management. And we provide as much assistance as we can. If we can't answer your question, we'll direct you with a warm handoff to someone who can answer your question. So I hope that you're all pretty familiar with NAO, utilizing us as a resource as you can. And if you are interested in learning more about NAO, reach out to us. We'd be happy to talk with you about what our organization does, what membership with NAO means. We are your state association for nonprofits. And to either, help you out and answer any questions you might have, connect you with any training resources or tools that you might need, or talk about membership. So as Amanda said, today we're here to talk about finance fundamentals, some of the things that you need to know to be fiscally responsible for your organization. And I know we're a pretty small group today, so I encourage you all to feel free to share your videos, unmute yourself if you have questions. There's a hand raise feature that you can use to ask those questions. I'll also be monitoring the chat. I'm happy to answer questions throughout. You don't necessarily need to hold them until the end. And I hope you're prepared for some engagement and some breakout activities. We're going to spend about an hour and a half together, and we want to make sure that we make that as engaging and fun as possible when you're talking about finance and accounting. So let's kind of dive in and get the ball rolling with some getting to know each other. I know you likely all know each other, but if you'll share in the chat box to help me your name and your location, so where are you located around the state, what's the name of your market, and your role in the market. We'll just take a minute to let everyone use that chat box to make an introduction. Many people are surprised to know that I'm actually a remote employee for NAO. So NAO is headquartered out of Portland. We have a small office there, but we have staff in various places around the state. I am coming to you from Cresswell, just south of Eugene. So I am from a small town and work out of my home office. So that's a bit about me. Thank you, Catherine, for sharing. Catherine is from the Portland Farmers Market, market accountant. Thank you very much for joining. Lisa, also from Portland, market manager. Hello. Liz from Rocky Butte Farmers Market. Several farmers markets just in the Portland area. I have to say, I'm a bit of a country mouse when it comes to the Portland area. I don't know it super well. And so I'm always surprised at just how big Portland really is. But it's so great to see so many of you. Carol from Sweet Home, thank you for sharing. Sweet Home, Lebanon area. Melissa coming in from Coos Bay. Hi there, Melissa. We spend a lot of time in Coos Bay, my family. Feels basically like my own backyard at this point. So thank you all for sharing. It's good to see so many people from around the state. Looks like we have several market managers, an accounting assistant, market accountant. Catherine, let me know, are you a CPA or just working as an accountant for the market? Let me know. I love it when I'm teaching finance and there's a CPA in the room. I am not a CPA. But I have been in nonprofits and nonprofit management for about 17 years. I'm a previous executive director, worked very closely with our financials, with our bookkeeper, our CPA, and with our board of directors, and helping them to utilize, interpret our financials. So thank you, Catherine. Not a CPA, 20-year bookkeeper. All right, well, feel free to chime in if there's anything that you think we can clarify even further. I look forward to getting to know all of you a little bit as we move forward in this hour and a half or so together. Melissa, I'll pop by if I'm in town one of these days and the market's happening. So while we've got the momentum in the chat box, just some more information to kind of know a little bit about who's in the room. So is your market all volunteer, or do you have paid staff? Who's responsible for your market's financials? So mostly I'm talking about your kind of accounting and your bookkeeping. So do you contract that out? Do you have a staff member who does that? Is it the board's responsibility? Someone on the board acts as treasurer / bookkeeper? How do you handle that? And how are you handling your accounting specifically? Are you working with QuickBooks? Are you working in Excel? Are you using something else? Sage is another one I think that a lot of people are using. So let us know a little bit about how it is that you handle that at your organization. And if you'd like to unmute and just share, I'm happy for that as well. So I'll monitor the chat box, but you're also welcome to unmute and just talk a little bit about your market and how it is that you handle some of these things there. All right, Carol's a board member doing the book work. So it looks like you don't have a dedicated staff member who does that. That's all right. Let's see. Volunteer run, hiring our first employee starting May 2nd. Liz is taking care of the financials, mostly using QuickBooks Online. Yeah, super familiar with that from my days as an ED too. That's what we use as QuickBooks Online. 3 paid staff at St. John's. ED is responsible for accounting using QuickBooks and Excel. Okay. It looks like Lisa, you guys are using a contract bookkeeper. The market manager gets all of the paperwork together and the bookkeeper enters most of the information. Yeah, I'm very familiar with that process as well. It can be handy to just have someone who's running that stuff on the back end, and then someone who can do that paper managing from inside the office and, printing the checks once they're prepped for you, those kinds of things. Let's see, Catherine, paid staff and volunteers. Financials are combo of ED and outside accounting consultant. The day-to-day accounting is done by Catherine and an assistant in QuickBooks. Great. Melissa, you guys are still using paper, updating to QuickBooks and Excel. That's great. All right, so it seems like we have a bit of a mix in the room. So we've got some people who are utilizing staff to handle their markets finances. Other people are using QuickBooks or Excel. One person's still doing it on paper. It's a valiant effort. Not a lot of people know how to even do that these days. But it seems like we've got a good mix. So hopefully, everyone will get something out of this session, and we'll have lots of opportunity for continued discussion as we move forward. But thank you everyone for sharing and letting everyone in the room learn a little bit about you. I like to start off these sessions with a little bit of information about the legal duty when it comes to your financial responsibility. So if you are a 501c3, this is especially pertinent to you. If you're another kind of nonprofit, it applies as well, although I will say that ORS 65, the laws that govern nonprofits in the state of Oregon, is very much tailored to the 501c3. So it's a little bit more vague at times. They have a harder time with some of the other designations of nonprofits. But generally speaking, and according to the Oregon Attorney General, the board is legally responsible for 2 things: safeguarding the fiscal health of the organization and protecting its resources. So there are a lot of other things the board is also responsible for, of course. But when it comes to your financials and your fiscal health, the board is responsible for safeguarding the fiscal health and protecting the resources. And this can mean a lot of different things, right? So your fiscal health is not just making sure that you have financial controls and that kind of thing. Making sure the organization is fiscally healthy means that you have adequate resources to be making meaningful progress toward achieving your mission, right? And protecting its resources means that you're maintaining that meaningful progress, making sure that you're staying right side up, but also protecting it from fraud, embezzlement, or any other risk or issues that might impede your ability to achieve your mission, but also mean that there is some kind of legal issue going on within your organization. So the board is the ultimate authority for this responsibility. And thank you, Melissa, for your question. So this Guide to Nonprofit Board Service in Oregon, this red book, as we call it internally for shorthand, is available on the Oregon DOJ website and the Oregon Attorney General. If you search for this Guide to Nonprofit Board Service in Oregon, you can find a PDF that you can download of the whole thing, but you can also email them and ask them to mail you copies, and they will do that for free in any denomination. So we ask for 300 copies at a time, and they happily send them to us because we get them in the hands of a lot of nonprofits. So if you wanted 12 or 15 or 20, they're happy to send them to you for free. So I encourage everyone to become very familiar with this book. It's very short, very concise. But I also encourage you to share it with your board and your staff. Excellent. Thank you, Amanda, for sharing that. So yeah, it's super easily accessible and really important for everyone to be familiar with. So we're going to start by talking about nonprofit finance and accounting and kind of what is the difference between these things and how do we engage with these. I'm going to talk primarily throughout the session about the board's responsibility, but chime in if you have any other questions about how does this apply to me as a staff member or so forth. So there is a difference between accounting and finance, and these functions are very different within your organization, how you engage with them and what kind of story and information that you get from them. So accounting is the day-to-day recording and tracking of the money in and out of your organization, right? So that's your bookkeeping function. That's your accounts payable and your accounts receivable. This is your accounting. But finance is that longer term strategic planning as it relates to your financial health and the management of your assets over time to make that progress toward achieving your mission, right? So how you manage your funds, how you manage your money, how you project long-term, how you make plans for your future, how you handle any kind of pitfalls or hurdles along the way. These are strategic decisions that you make about your finances. And that's why these functions are very different. So you can have someone who has the responsibility within your organization to handle the accounting, your bookkeeper, your accountant, your treasurer maybe that has a role in bookkeeping for your organization. They can handle that day to day. But the board is responsible for maintaining the financial direction of the organization and managing the assets of the organization. And so they cannot govern away or delegate away that responsibility. And so even if you delegate away the responsibility for the accounting, oversight of that accounting and the management of those assets long-term is still the responsibility of the board of directors. It's just important to understand these different functions and that although we may delegate that responsibility for accounting, we need to be very mindful of where that responsibility stops and starts and what the board's responsibility is for that oversight and that longer term strategic planning and management. Now we're going to jump into some breakout rooms, and I encourage you to take a moment before we do that to do a little activity with me. So if you have handy, I hope you do, or you can make a mental note of it, but I want you to draw a circle and then draw out the different revenue streams of your organization and how much they represent different slices of your revenue in your pie chart. So you're going to create a pie chart of your organization's revenue streams. This is just the money that comes in your organization. Where does your money come from? Do you have a grasp of this? Could you say generally it comes from 2, 5, 8 different revenue sources, and what percent generally of that pie each of the sources make up? So we're going to take just a couple of minutes now to think about that, to grab a piece of scratch paper and draw it out. And then I'm going to break you into breakout groups, and we'll spend just a few minutes kind of sharing and debriefing together. All right, so I'm going to take just about a minute and a half or so now to let you guys think about it, and then we'll do the breakout groups in just a minute. All right, so I'm going to break you up in groups of about 3 or so. And what we're going to do is we're going to spend just a few minutes talking about your revenue streams and how comfortable you were doing this activity. Do you have a pretty firm grasp of where your revenue streams are and about what percent they make up of your pie chart? Or do you have a lack of clarity that maybe you need to be a bit more mindful of? So take a few minutes to talk about what your revenue streams are and your comfort level with this activity. I'm going to assign the breakout groups now. Anybody have any questions before we begin? All right, seeing none, I'm going to give you guys about 3 or 4 minutes to discuss, not a super long time. I'll give you a reminder. There will be a notification that the room will close in 1 minute. So that'll be your 1 minute reminder to start wrapping it up. And we'll see you back here shortly. All right, welcome back, everyone. I hope your breakout room conversations were productive. Anyone want to share a little bit about what they heard or how they felt doing this activity, about your revenue streams? Looks like there was maybe some tech difficulties in one of the rooms. Just 1 or 2 report outs.
I can share a little bit.
Thank you.
So our group is interesting because we kind of had broad area with like some markets had more income from like sponsorships or like one market, for instance, like their local hospital gave them money, which is a big portion of their income versus like my market was mostly stall fees. So that was really interesting kind of seeing that different markets are getting money from different places. And then we had some markets that were the board members were doing the accounting. One market where the board created the budget and then gave it to the manager to fulfill, and then another one where the manager created the budget. So yeah, just kind of we had a diverse group.
Yeah, certainly. Thank you for sharing. Anyone else want to share any insight about their conversation or about how they felt doing this activity? How confident were you in understanding where your revenue is coming from now?
I was confident to get last year's numbers, obviously, but I'm not 100% confident on what's going to happen this year because our market is going through a lot of big changes this year, going from monthly to weekly and hiring our first staff member. So, and plus somebody else mentioned coming out of COVID. So
Yeah,
I'm not sure how our pie graph is going to look in 2022.
fair enough. Yeah. Well, I definitely encourage you to, do this activity with your boards. Ask them how they feel about this. Take a look at last year's revenue streams and create a pie chart for that. And then you can even look, month to month, what is your, how's your pie chart moving? How's it changing? Or however often it is that you get financials. So maybe you're getting quarterly financials, or maybe it's monthly. We will talk a little bit later about some tools, like a dashboard that can be helpful, and how I'll talk about how pie charts can play into that as well. So moving forward with some additional information about accounting then, there are usually two methods that people use to track their accounts payable, accounts receivable, how you're tracking your accounting, how you're performing that. And that's either the accrual method or the cash method. And do you know what method you guys are using? Do you know if you're accounting right now on a cash basis or if you're using accrual? Just take a second to share in the chat, if you will, if you know. But basically, the accrual method means that your revenue and expenses are recorded when they are earned. So when you receive an invoice, you track that invoice in accounts payable. When you submit an invoice to someone for payment, you track that in your accounts receivable. And the story that tells about your finances is going to be a little bit less about your specific snapshot in time right now. It'll give you insight into what's going to happen soon, and it projects a little bit for you. So that accrual method, you're recording information that maybe hasn't exactly happened yet. So you may be recording an invoice before it's actually been paid, but it's in that process. The cash basis only recognizes that revenue when the cash is received, when it hits your bank, and the expenses when it comes out of the bank. So it's a bit more of a snapshot in time that tells you kind of how your accounts are looking right here, now, and today, versus the accrual method, which is providing you with a bit of a projection based on those accounts receivable and accounts payable. Looking at the chat, looks like we've got a bit of a mix again. So a lot of accrual method. I think that's the most common for larger organizations and organizations that are often a bit more like financially stable. I generally recommend a cash basis. And again, I'm not a CPA, but if you are having difficulty making ends meet and you're really wondering like how to make sure that you're going to be able to make payroll or pay other liabilities month to month, a cash basis can be really handy for that. Just kind of knowing what's here today. But let's keep looking and moving forward with some of this information. And we'll start kind of building on this information in a way that hopefully adds some clarity. Oops, I am trying to click with my mouse here. There we go. So the information that your financial statements provide you will always include your assets at the top of that statement. And so the assets are what you have, what you were owed, and what you have prepaid. And so the assets will include, like I said, what you have. That might be your cash, any endowments that your organization has, the value of inventory that you might have. So if you sell t-shirts, the value of those t-shirts or other promotional items would be included in your assets as well. Any land that you may own, or the value of equipment that has not yet come off of your books. It also includes what you are owed. So this is grants that are awarded but not yet received, or work that has been done that you have not received the revenue for just yet. So if you have received, for example, a multi-year grant that you got payment for year 1, but years 2 and 3 you have not yet received, you'll still see that on your statements. And then what you have prepaid. So the value of things like the security deposits that you've paid, or insurance premiums. If you've paid your insurance for the full year, but you're only halfway through the year, you'll see those monthly premiums leaving your books on a monthly basis, but the value of the remaining year may still be on your books. So your assets can include a lot of different things in the various states of receipt, and the information that tells you can be very different. And so understanding your assets, what you have, what you're owed, and what you have prepaid, the liquidity of these assets, your access to them, is going to be really important to understanding your financial position. Now, I'm saying a lot of things. I want to let you know that here in a moment, we're going to look at some sample financial statements. So we're going to look at a balance sheet and a profit and loss statement. And so hopefully some of this we'll have a second to apply some of this information to those samples, and it'll make a little bit more sense. But it's really important to understand, that the information that you're being provided, there's a lot of context to that. And that context is very important to understanding the story that your financials are telling you. Now, the other thing that your financials will tell you is your liabilities, and this is what you owe and what has been prepaid to you. So what you owe may be things like your rent or your mortgage, credit card debt that you may carry, payroll and payroll tax. So if you are going to be making a payroll tax payment, the value of that may be, you may be paying it quarterly, but you may see it added to your liabilities on a monthly basis as you make payroll. You will also see what has been prepaid to you. So if you have a contract for work that you're performing in this year, you received the half up front, but you have several months left to be expending that off of your books, or moving that, from your liabilities to your assets, then you'll see that on your statements as well. So again, there's a lot of context, and that's really what I want to instill in you, is that the information that you see, those numbers mean different things. Your access to that money means different things, and the story that your financials are telling you is very different based on all of that context. Now, net assets are the difference between assets and liabilities. So assets minus liabilities equals net assets. And net assets are categorized based on the existence or the absence of donor restrictions. So the GAAP accounting principles, generally accepted accounting principles, call for an organization's net assets to be classified by restriction level. So we'll take a look at what restrictions mean, and we'll see this in the examples, but your access to your revenue or your money is going to be different based on the restrictions that they might have. So if you have donor restrictions, temporarily restricting your funding or permanently restricting your funding, how much access you have to that and how it impacts your net assets is going to be very different. So for example, if you owned a house, an asset, and the value of that house is $300,000, and you have an outstanding mortgage balance, that an unpaid mortgage balance, this would be a liability. And say that balance is 200,000, then your net assets would be the 100,000 in equity that you have on that house, right? So likewise, your nonprofit's assets are the difference between those. Your net assets are the assets minus liabilities. So understanding this ratio, this formula, and how upside down or right side up your organization is really important to understanding how financially healthy it is. And this may change a little bit, as you receive more income, you get a grant, you might be net positive a little bit more. If you undertake a capital project and you're making some capital improvements, you might have more liabilities in the shorter term that hopefully you're finding a way to cover, right? But it's still really important to understand this formula for your organization. It tells you a lot about how financially healthy your organization is. So I mentioned restrictions, and that the various kinds of restrictions provide a lot of context for the money that you have and your access to it. And there are 3 buckets of restrictions. There's temporarily restricted, permanently restricted, and unrestricted. And your unrestricted, I'm going to start at the bottom of this list. Your unrestricted is to be spent at your organization's discretion. So there are no restrictions. You can use it however your organization likes. Generally, earned revenue, for example, is completely unrestricted. You may often receive donations that are unrestricted as well. Individual donations are often unrestricted. When your funding is permanently restricted, this means that you can only spend the interest that it earns, right? If you have an endowment that has been permanently restricted, you can only spend the interest that endowment earns. The principal must stay and continue earning interest. And your organization likely has some kind of policy about how you're handling that endowment, how much you're reinvesting into it, how much of that earned interest you are moving to your unrestricted assets. But generally speaking, these permanently restricted funds come in the form of an endowment of some sort. And these can be restricted by the donor. Someone says, I want to make a donation to your market, $100,000, and I want it to be permanently restricted in an endowment that, will provide you some interest over time to provide you some longevity and some predictable funding. It could also be that your board has permanently restricted some funding to be put away for the same reason, for that longer term planning and sustainability so that you can count on that over time, market depending and all of that. But the one thing to note about permanently restricted revenue is that permanently restricted means forever in perpetuity, forever, always. So if you have a permanently restricted endowment, that means that should your organization dissolve, then you need to find a new home for that endowment. So that endowment does not mean that you have a rainy day fund, or you can spend it down if something should happen, or, hey, we know we're going to close in 2 years, so we better start spending that down. That is not legal. You have to find a new home with an organization that performs a similar charitable benefit to yours for your permanently restricted endowment, or you, there's some other legal options. You can go back to the donor and ask them what they would prefer. If you cannot find a home for it, one will be found for you by the Oregon Department of Justice and the Secretary of State's office. But permanently means permanent. And I want to make sure that everybody understands that when I do these sessions. So many of our organizations are not so fortunate to receive permanent endowments. Some are, the lucky few are out there. But, should you come across it, it's important to understand what that means. Temporarily restricted, however, is more common, right? This is restricted in time or usage, and usually from the donor who restricts it, sometimes from our boards. So your board can designate like a rainy day fund. So your board can temporarily restrict some revenue in a rainy day fund, or set aside an account so that you have some assets year over year that can be used to fill in the gaps or provide some sustainability should you experience some kind of pitfalls. And when your board temporarily restricts that revenue, then usually there's a policy around how it can be spent and when, and there are some parameters and financial controls around, making an appeal to the board to unrestrict some of it and apply it to a certain year's financials to cover a certain gap. More often though, again, if you have a rainy day fund, if you've got 3 or 6 months or more of reserve fund set aside, that's wonderful. Not every organization has that luxury. But most often when we come across temporarily restricted, the one that probably the most familiar to all of us is when a donor makes a donation and says, I want this to be used for a specific purpose. So I'm making a donation to support a new staff position, or I'm making a donation to support better equipment in your market, right? Or I'm going to make a donation to support a certain capital campaign that you guys are doing. They make a donation in support of a specific effort, and that is a usage limitation that temporarily restricts that revenue. And it's really important to understand that because there are legal implications to that, right? Not abiding by donor restrictions is not only unethical from our fundraising code of ethics, but it can be illegal as well. And so it's really important to understand donor restrictions, how it impacts your balance sheet, your access to your funding, the context through which you can use that funding, when and how. But there are other ways too. So if you receive a grant, for example, and your grant is you get $2,000 to buy X piece of equipment in the year 2022. That grant award letter with those parameters is a temporary restriction that puts limitations on the time and the usage, right? You can only use it for that piece of equipment in this year. It has to be spent in, within 12 months. And it's for, this use this time. And should you sign that award letter accepting those parameters, you're legally obligated to follow through with those parameters, right? If you decide to spend that money on something else, say, oh, we got more grants than we thought we'd get awarded. We applied for 5 thinking we'd get 2, we actually got 3, so this thing has been funded. You have some options. You can go to that funder and say, hey, we would like to ask for a revision of our award letter, and we would like to reallocate that money to some other piece of this project. Or we'd like to push it into next year so that we can do phase 2 of this project. But having that conversation with them and getting a revised award letter is really important because, again, there are legal implications. If you went ahead and just said, oh, we got all of this money, I'm going to go ahead and hire that new staff person I've been wanting to hire with this money that was received to buy equipment, that funder would have the legal right to say, actually, we want that money back now. And if you've already spent it, now you're in hot water, right? So it's important to recognize that. Similarly, with our individual donors, if a donor makes a donation for a specific cause, like, oh, I'm funding a capital campaign to help your market buy the land that you hold your market on, and I'm supporting that particular cause, and then you don't get as much as you need, so you decide not to do that campaign anymore. What you have to do is go back to all of those donors and ask them if they are willing to reallocate their money, or you have to return it, right? That's the legal obligation that you would have ethically and legally. However,
Oh,
yeah,
or
thanks.
maybe you're getting to this, but I wanted to ask a question or give you a scenario that happens a lot at farmers markets. Maybe you'll
Okay.
just, is that a lot of times what is compelling to people, to individual donors to donate to farmers market, is the SNAP access or incentive campaign giving, so that markets can do a match at their market. But a lot of times what markets really also need is, general operating money. And like, I've seen markets being like, how do we tell people like that this money can come in and might be used for a match, but also might be used for operation? How do you say that stuff so that you don't lock yourself into restricted stuff, but say that like, these are the kinds of things that, not to get into a whole fundraising workshop.
No, that's okay. I was planning to get to this. I'm glad you provide that scenario so that we can specify. It sounds simple and complicated at the same time. It really boils down to such as. We will use this money to do things such as provide a match. That alone, that's, stipulates it, that leaves enough vagueness to say that you'll do things. So what I generally recommend people do, and be very mindful, because we can put temporary restrictions on ourselves based on how we ask for the money. This is exactly what you're talking about. Not even when we don't intend to, right? So if we say, please donate to match SNAP benefits, right? Your donation will help us to match SNAP benefits. You have to spend it on that. If you say, please support our market so that we can continue doing wonderful work such as matching SNAP benefits, now it's unrestricted. It is as simple as how you phrase that, and those such as words have great importance here. But asking people instead to support your market so that you can do work that's important to them, like XYZ, is really important, right? That's a very simple but important distinguishing factor, right? The other thing is that we will sometimes do those appeal letters that have like dollar amounts associated with it, like $5 does this, $10 does that, $50 does this. It's like if you donate $10, then this thing will happen. That's another case that we really want to be mindful of how we're asking for that, right? Because how we ask for it is how we have to treat it, how we have to restrict it, and then our access to that funding in the time of need for a general operating. Like, it's great to have a lot of money to buy new equipment because you put it in your appeal letter, but if you can't keep the lights on, then that's a problem, right? So yeah, we really want to be mindful of how it is that we're asking, and then once we do ask, tracking those restrictions so that should a donor come back and say, hey, I made this donation and I really want to know, did you do that thing? You can say, yes, we did. Your donation was one of 20 that helped us do that. And we spent, an equivalent amount of money. It doesn't have to be cash in, cash out, right? It doesn't have to be direct across, but it is an equivalent amount of money doing the appropriate things. I will say, if you ever get in the situation where you have underspent on a grant, spend on something very, very similar or related to the project to spend it down, right? Foundations don't want your money back and you don't want to have to give it to them. So if you ask for a bunch of equipment to do some kind of, I don't know, whatever work it is, then, and that equipment is like $500 less than you thought, buy any accessories that come with that equipment, right? Buy accessory or things that you'll use, supplies you'll use installing or utilizing that equipment. So I work with a lot of food pantries, and you know, they buy like big mixers and things that they can put on like community dinners and things like that. And I told them, you've got $500 left, buy gloves, buy paper towels, buy the things that support that project and allow you, you know, to do that work, that are related enough that the foundation's not going to care, but you don't want to give the money back. They don't want it back because that's a bookkeeping nightmare for them. So close enough is usually good when it comes to those foundations, especially. But being mindful of our restrictions is really important to understanding the context of your funding. Any other questions before I move on? Carol, did you have a question?
No,
Okay, you unmuted. I just want to make sure.
yeah, no.
Okay.
You're making me realize how woefully insignificant our market is, because our board members pretty much pay for everything. There are no office supplies. The city gives us a permit for where we hold the market. The tents that we have are old. Everybody supplies their own. You know, so it's very minute what we have.
Yeah.
Um,
Yeah. Well, you know, we're going to talk a little bit about, we have a couple of activities, one that we'll work on a little bit today and one that we'll send back with you to do with your board, to talk about where you are today and where you want to be and how we can work to help bridge those gaps, right? Because it could be that, you know, you guys are achieving the goals. You know, one of the food pantries that I've worked with, they fed 29% of the community on $7,000 a year.
Wow.
They did everything they needed to do, right? So it could be that, but if you have some goals for growth, hopefully some of this information and these activities will work for you. So let's look now at some of the examples. So I said we're going to share some financial statements, and we're going to look closely at these. These are fairly small. I will admit that the font may be small. I tried to make it as big as I could fit on the screen. If you're having trouble seeing it, just know that we're going to be sharing the slideshow with you. So I'll send this over to Amanda to go out. And so you'll be able to kind of zoom in and look at these more closely. But I want to start with a balance sheet and talk about what this looks like, the information that it's providing to you, what to do with this information. If you're not currently working with QuickBooks or an accounting software that provides you with a balance sheet, the information that we're talking about is still going to be pertinent to you, right? So you may want to find another way to get to the same kind of information that we're going to talk about. But let's look at the balance sheet. So you'll note that this is a cash basis. It says that on the top left side. It's also a snapshot in time. So we're going to call it September of 2021. So it's a month of financials. It says at the top there, September 30th. So it's the end of that month. And the balance sheet shows us our information in two sections. So we see the assets and the liabilities and balances. The assets are provided to us in the form of our checking account, savings account, inventory of some publications. So the value of those things were we to sell them. It also provides assets like land, building, equipment, and the depreciation of those assets is accounted for here. It also shows us what is owed and on our liabilities. So that shows up in the form of credit cards payable, payroll taxes payable. So again, you can be incurring payroll tax liabilities monthly, but maybe only paying that bill quarterly. So you'll see that show up here. Current portion of your mortgage debt. And then there are some fund balances like your temporary restricted funds and an unrestricted fund balance. So how this information is presented to us, like I said, I want to point out again that we're seeing checking, savings, credit cards, payroll. It's going to be very different when we look at a profit and loss in a moment. But the assets on the top are also listed in order of liquidity, right? So if we went to the bank, it would be easy to access our checking account. Also very easy to access savings. The inventory of the publications, now we're getting a little bit harder. We'd have to sell those publications in order to liquidate the value of them, right? Selling those are probably easier than selling things like the land in our building. So our assets here are listed by liquidity, and our assets minus our liabilities are at the bottom here. That's that total liabilities and fund balance.
So Jen, would
Actually,
inventory of publications, that's like an example from this pretend organization, like for a farmer's market, would that be like things that they sell at their info tent, maybe like t-shirts and bags and things like that? Would that be the equivalent?
Exactly. So it's any kind of inventory that has a value that were you to sell it, you would liquidate the value of that asset, right? And it's not earned yet because it would be sitting in your checking account likely, right? Let's look and compare this to the profit and loss. So the profit and loss statement we can see is much different. There's a lot more detail. And instead of seeing at the top our assets and below our liabilities, we see revenue and expenses. So this information is a bit different. And under revenue, instead of seeing checking account, savings account, we see grants, contract services, fee for service, the publication sales, right? So this is that pie chart of our revenue, where it all comes from. And instead of seeing just the month of September, we're also seeing the year to date and our budget. So we have a budget to actual on this statement as well, and we can compare the year to date to the budget. So I want to point out that the kind of information that this provides is obviously a lot different than the balance sheet, right? What's sitting in our checking account today may be harder to distinguish on this sheet, right? What we owe in mortgage this month or next month might be harder to see on a sheet like this, right? This is why we often will get both. So when a board receives financials, compilations from the bookkeeper or the accountant, you're often receiving both of these to provide you with a full snapshot and a lot of context associated with it. So if you can see this, take a second to look it over and let me know what you're thinking. Like, what are some things that you would be looking at as you're reviewing this financial statement? What are some things that you might be looking for?
So as a farmer's market,
Mm-hmm.
we're not going to have, we might have repair and maintenance of a vehicle, but the farmer's market doesn't own any vehicles. And we own no buildings, and everybody is pretty much supplying. So in essence, the board members are supporting the organization.
Yeah.
We would like to grow, but that means we need to have committed vendors, which is sometimes a difficult thing to get.
Mm-hmm.
So as far as our market, we're looking at getting fundraising and getting donations in. And the donations are very specific, like they're for the pop program or music or education.
Right. Yeah. So for your organization, it could be that this is, your balance sheet or your profit and loss are very simplified versions of what we're seeing here, right? A lot less revenue streams, a lot less expenses.
Right.
But the same kind of ideas are going to apply in most ways, right? So you're still going to be able to look at what is our current financial position? How are we doing budget to actual? If I were a board member looking at these statements here, I would be wondering things like, what is our year end? Because if our goal is to raise $67,000 in grants this year, and our year end is December, and in September, our year to date is 18, that is not a great budget to actual, right? That, like, we're not doing well achieving our goals. So we're going to be looking at, okay, actually, is our year end a mid-year year end? And so we're much earlier in our fiscal year than that. And we've got lots of time. Maybe we also know that we do a big fundraiser at a certain point of the year. And so that's why our budget to actual for total revenue is pretty off. Or maybe there's one big grant that we always get in December. And so that's why we just haven't seen that money come in yet, so that context is really important to understanding what the financials are telling you, right? So if you don't know that history of your organization and kind of the seasonality of your revenue streams, or even the seasonality of your expenses, like we are an organization that, always spends a lot of money in May as we're preparing for the season to open. And then it's really minimal throughout the year. That seasonality is going to be reflected in a month snapshot, right? But how you take that in context as it relates to the other months of the year is going to be important, right?
Correct.
Amanda, did you have another question or
Yeah,
comment?
I was thinking about what Carol was saying, that much of her board is just sort of self-financing their expenses. And I was wondering about tracking in-kind and donations so that, first of all, that would help them know if they wanted to move away from that, like how much actual money that they do need to have to how much they need to fundraise for or get from fees from their vendors, and also just a lot of grants that you go for have a matching and an in-kind aspect. And it would be good to be tracking that stuff and knowing how much they can contribute in that way towards a grant.
Yeah,
I
certainly.
think that's a very good point to make, because we do want to grow and we do need to have that information. Thank you, Amanda, for mentioning it.
Yeah, certainly. If your organization, there are a couple of things to keep in mind. One, that it's really hard to know what your budget actually is if most of it is being subsidized by your board and you're not tracking that at all, right? It's hard to know, like, how much money do we spend every year? How much money do we need to earn to stop requiring so much of our board members? So tracking that is important. It's important to the burnout of those board members too. It's going to be hard to enlist more board members if you say, oh yeah, we're going to ask you to replace Stephen over here because he wants to leave the board, but he also buys half our supplies every year. So like, if you're going to be a board member of ours, you're going to be, expect to be spending some money. That's a hard pitch, right? So it's going to be hard. You're going to have more attrition and more board burnout if you're requiring so much of them, or even if it's not required, but kind of implied because that's the culture you've created. But then also, on the positive side, tracking that information can, help you to better understand your financials and even support the granting process, as Amanda described. So, tracking that and letting foundations know that you have a revenue stream covering X% of your budget every year. It happens to be in-kind donations from your board, but it's a percent of your budget, and should be tracked and accounted for as such.
Okay.
So let's look now at a sample org budget. So I hope that you're spending time every year to plan, reflect, and create an organizational budget. Oftentimes, if you're applying for grant funding, then they're going to ask you for a budget. So let's take a look at this one. So you can see that the total revenue is 180,000. Primarily, that comes from grants and contract services, with some fee for service included in there. Expenses, we've got 121,000 from personnel wages with some payroll taxes included, some administrative expenses, like the things that benefit the organization as a whole. These might be called your shared expenses or overhead, utilities, your accounting costs, repairs and maintenance on a building that your main office is in or something like that, telephone and internet and so forth. Your direct program expenses are the things that you spend on the charitable benefit activities themselves, your direct work that benefits those that you serve. Publications and products. So if you sell publications, you're likely earning revenue for them, but you likely have some kind of expense. So whether that's t-shirts or bumper stickers or tote bags, there's likely some expense related to the products that you're creating. And then, on the revenue side, you're going to see that earned revenue come in. And then some fundraising expenses as well. So the 990 that nonprofits need to submit to the IRS includes a line where you have to report on your fundraising expenses. And that's why you'll see it accounted for outside of your administrative expenses. But the total expense is 168,990. And that means that this organization is working with a net balance of 11,110. So they have an excess of revenue over expenses. Now, some things to keep in mind as you're working on your budget is that your budget should illustrate a plan and not a wish for your organization. If you have a wish to grow 10% over the next 2 years, then or 10% a year for the next several years, then a plan to grow that should be reflected in your budget. Simply putting in higher numbers does not constitute planning, right? You should also be using historical information to plan for the future. So comparing what you actually spent last year, increasing that for the goals that you have, or decreasing certain expense areas that you want to spend less on. But then again, making a plan for how it is that you're going to bridge that. And once you create a budget, you don't want to file it away, right? You don't want to spend all of the time going back and forth with your staff and your board and making a budget and getting it approved by the board to stash it away and never look at it again. It should be something that you're reflecting on a regular basis, whether that be at monthly board meetings, when you receive your quarterly financials, however often it is that you're reviewing your financials, you should be reviewing your budget to actual. And we'll talk a little bit later about how some of this relates to our financial controls as well. And then you should, make sure that you're editing it if circumstances change. So a budget is not set in stone. A budget revision is something that is possible and likely necessary if things in your organization change drastically. So a lot of organizations were making budget revisions for quarters 2, 3, and 4 of 2020. I guarantee you that, COVID changed a lot of things. The plan we all had for that year was drastically different very quickly. And we were making budget revisions to better project the picture of what we know now, right? So a budget is something that should be a document that grows and changes and is adapted as your organization gets more clarity. You don't want to be changing your budget every month or anything like that. But if things are significantly off, you're seeing major differences in how your revenue is coming in or how you're expending based on, maybe the climate of funding, or maybe just some strategic decisions your organization has made, then you should be making some amendments to your budget as well. I also want to remind us, as I mentioned, that these statements provide a lot of context and they tell a story about our financials, but different people, different stakeholders are going to use these financial statements and have their own priorities and perspectives on them. So internal or external stakeholders might be absorbing this information differently, might receive the story that they're telling differently, and it's important to think about that. So how a board member uses this information to provide financial oversight and some strategic direction to the organization is different than how a managing staff member who manages certain aspects of the budget is going to relate to that information to make programmatic decisions. How your donors, casual or otherwise, review or access your information. So some donors might be accessing your 990, which is publicly available, in order to make decisions about how they want to make donations to your organization. And foundations are going to be asking for your financials as well. So making sure that you're aware of the story that they're telling, how each of these stakeholders utilizes their individual lens to receive that information, how you might be able to provide some ancillary support to these individuals or stakeholders as you provide them with financials. Maybe there's a budget narrative that would help your foundation funders better understand the story that they're reading on the financials. Or maybe there are some spaces in your 990, for example, where you can write about the programmatic activities your organization is undertaking in that year. That's another opportunity that we have. So just be mindful of the different stakeholders and how they receive and absorb this information and use it to make decisions. So one management tool that I like to suggest to boards is a dashboard that will provide a visual summary for the information that you receive in the financial statement. So you still should receive financial statements, but it can be helpful to have a visual summary of that to monitor the finances and make decisions about how to manage those long term. So oftentimes this looks like creating some graphs, whether that be a bar chart, a pie chart, or some kind of dashboard that is, green when something is in a positive position, yellow when it's approaching neutrality toward, being a negative number or outside of your goals, and red when it needs to be flagged for attention. So a dashboard is something that should fit on one page. It should be mostly visual so that the board, who again is receiving the financial statements, can use that as kind of a quick guide. It should be refreshed each time the board reviews those financial statements, and it should include some meaningful indicators of financial health for your organization. So if you have a goal of increasing donor contributions in the year 2022, then you might include a dashboard that shows month over month how those donations are coming in, and create thresholds for, okay, we are growing them 10% every month, and if it's 10% or more, it's green. If it's only grown 2% to 5% or something, it's going to be red, and in the middle there, we're going to highlight that yellow, so that the board kind of has an understanding of what they're looking at and how to interpret this information. Now, I'm not going to read through all of these because we only have about 15 minutes left, but I wanted to provide you all with some key financial indicators. So some questions that your board should be asking themselves, that you should be asking yourself as you're reviewing the financial statements to understand the information that you're being provided and to start to kind of monitor those indicators for the financial health of your organization. So I encourage you to print these out, grab some financials, ask these questions, review the financials, and kind of go back and forth to make sure that you have a thorough understanding of the financial statements, the context, that story, and what it means for your organization. Now we are kind of short on time, so I think we're going to skip the breakout rooms, and I'm going to walk you through some revenue, some of this handout that I'm going to provide you in the follow-up email that Amanda's going to send out. So you're going to get 2 worksheets. This is the first one. Let's just have a short conversation here. But this particular worksheet asks you to look at those financial indicators. That includes your annual revenue. So where's all your money coming from? Any foundation grants that you receive, individual donations, corporate or business contributions, earned income, in-kind donations, and event income. There's also space for a couple of other sources of revenue. You can add more if you like. To make a note of where you are today and where you need or you want to be in time. So this is just a short activity for some reflection, for some discussion prompting with your board. But it asks you to, spend a little bit of time filling in the worksheet and then circling 2 or 3 indicators or goals that require your most urgent attention. So for sake of time, I'll just ask you guys now, where in your kind of revenue pie chart do you think your organization needs the most attention? So is there a certain revenue stream that you're concerned about? Is there one that's missing from your pie chart that you're looking to add? Is there a certain area of growth that you're hoping to see? Tell me a little bit about your revenue goals.
Well, in looking at this, I see a lot of benefits. And one of the things I would like to see us get more of is corporate business gifts. Like having a Best Western provide us with, a weekend gift package, and we can raffle those out or get people to want to come to the market to because there's more there than just the fruits and vegetables, the meats and things. I think one of the things since COVID hit, we used to have music, and a lot of people came for the music. It was a social activity for the community.
Right. Yeah, it's important to have some goals around that opportunity for growth. And that those gifts could also be in the form of sponsorships. They could be cash sponsorships, right? So how you ask for those can be really important as well. Anyone else have any revenue goals that they want to share with us?
Curious if maybe any of the markets that are here, when you talked about your pie charts and your goals, like how it was between vendor fees and maybe other sources of income, helps get you started on an answer.
All All right, well, like I said, this is a really good opportunity to have this discussion with your board. You'll receive this worksheet that you can print out to, prompt that discussion, and you might start a meeting of your board with this kind of worksheet, or take it to your fundraising committee if you have one, for them to be working on. So I hope it's a useful tool for you in that regard.
Oh, absolutely. I think it is.
Thank you, Carol. I appreciate that. I want to spend a few minutes too before we wrap up talking about financial controls. I know that it can be especially challenging in the time of COVID, but we'd be remiss if we didn't also talk about that responsibility for safeguarding the assets of the organization, right? So let's spend a few minutes talking about that, and then we'll see if we have some time for additional questions. But I want to note that fraud and embezzlement is all too common in nonprofits. It's the unfortunate reality that nonprofits make it often much too easy to take advantage of our kind of altruistic hearts, our understanding that everyone is here because they care and they're passionate, and that no one who's associated with this charitable benefit organization would do anything to harm us. But it's not the case. And if we don't protect ourselves, then we're going to end up as one of these statistics. And if we don't do something about it, then we're going to send them off to be some other nonprofit's example or a problem when they move on to some other organization. So I like to make note of some of the most common forms of fraud, because once you start looking at this, you'll notice that it's actually pretty easy. So it's easy to commit credit card and debit card abuse, right? So using your credit card or your debit card, if you have an organization one, for things that are not business matters, they're personal expenses, and then that person loses the receipt. That's pretty common. Writing unauthorized checks, they're writing checks for personal expenses, they're writing checks to themselves or to a loved one. We've also seen people duplicating payroll. So either they give themselves raises, they give themselves additional, like a second payroll, or we've also seen people that are adding their loved ones as staff members when they aren't working at the organization, just to be another person on payroll, or they are making fictional people to duplicate payroll. We also see reimbursement abuse. So people are asking for reimbursement for expenses that they incurred on their own debit card or credit card, but they're not submitting receipts with them, and they're getting reimbursed for things that are not business purposes. We also see false invoicing. So someone processes an invoice that is for, some inspection, and it was $200, and oh yeah, okay, the inspector came, cool. That never happened, and that $200 went right into their own pocket, right? On the revenue cycle, at times it's even easier. Skimming cash, that can look like somebody's opening the mail, someone made a donation in cash, and that cash goes right into a pocket instead of being deposited, right? And that donor doesn't get acknowledged, and that money doesn't go to the benefit of the organization. People are also depositing checks into different accounts. So they go to make the deposit, they're depositing it into a personal account, or creating a secondary account so that they can siphon off assets. They're setting up unauthorized accounts that are secret from the board or from the governance of the organization. So it's, if you love true crime like me, then, maybe this is not terribly surprising, but it can be difficult. And it's important to know that if something should happen to your organization, we want to do something about it. Ignoring it is not an option. It doesn't stop it. If you simply remove that person from your organization, they often go on to be someone else's problem, right? Another unwitting organization will take them on as a bookkeeper or something and make it their problem. And there are some things that we can do to fight that. So we can prevent, detect, and correct, right? So we can set policies and guidelines, expectations to prevent any kind of fraud or embezzlement from happening. We can budget, set authorization limits, separate duties, require bids to make sure that we are putting up protocol and processes that help prevent any kind of fraud. I want to remind us too that this doesn't just prevent the fraud from happening, it also protects each individual so that no one can say, that Carol, what has she been up to? It's really easy to say we've got policies, procedures, and we've got financial controls that assure us that, Carol is above reproach. Right, we've protected Carol in every way possible, and she's above reproach in this regard because we always have two people checking the mail, or we always have someone looking at all of the canceled checks. And I'll get to some examples in a moment. We can detect, right? We can reconcile accounts, monitor budgets, perform audits to find that information, find the errors when they're happening, and then we can correct them quickly, acting on those audit recommendations, correcting mistakes, maintaining accountability, and improving systems. So again, we're correcting to make sure that fraud or embezzlement is not happening at our organizations, but also to make sure that we are protecting all of the people associated with it. Now, for a lot of small organizations, segregation of duties can be really challenging because we don't have a lot of people. We're often acting remotely. We don't have a facility or an office somewhere, right? But there are some simple ways that we can help set up some segregation of duties and some oversight. What it boils down to is that no one person should be allowed to complete a financial transaction all by themselves. So they should not be able to complete the entire accounts receivable or accounts payable process by themselves. And this, I've provided a few examples, but you can see how with just 3 people, we might be able to accomplish this. So for example, your bookkeeper, or maybe this is your treasurer who's in charge of bookkeeping, or whoever it is, they print the checks. The executive director signs and mails the checks. Maybe this is your board chair. These are mix and match roles, but you can see how 3 people can accomplish this. Someone else signs and mails the checks, and then someone reviews the canceled checks on that bank statement. Those little tiny checks that you get at the back with the signature and the payee and all of that. Someone's reviewing those to make sure that the signatures are correct, that only someone who's authorized has been signing them, that they're only going to people that should be paid, right? Your bookkeeper might process payroll. Your executive director might review and submit that payroll. And then the treasurer is reviewing the payroll budget to actual, making sure that it's in line with what you had budgeted, and then there aren't suddenly large jumps in the payroll expenses that cannot be accounted for, right? Your bookkeeper may process vendor invoices for payment. Your executive director review and approve those, and your treasurer would review the bank statements to make sure that there are no line items that cannot be accounted for, right? So I'm going through this very quickly, and I know we're at 2:30 now, but again, it's important to create these processes to not only protect your assets, but protect those individuals who are supporting and serving your organization. It can be done even in a remote environment, even with only a few people. For example, NAO is using Zoom to help with some of this. So when the mail gets opened, one person is zooming in to observe and discuss with the person who's physically opening it, just to be a eyes over the shoulder, right? Now, I mentioned there was another activity that you're going to receive, and that's the revenue SWOT worksheet. This one encourages you to look at your strengths, weaknesses, opportunities, and threats. And there's some prompting questions to get you thinking about where you may have some opportunity to grow your organization, to strengthen your revenue streams, where you might need to be observing and mitigating any obstacles that you might have in doing that. So you'll receive those 2 activities in addition to the financial indicators that I hope that you're, printing out those questions and asking them of your board as you're reviewing financial statements. It's good practice to have that discussion together. And the pie chart activity, I hope that you're doing that with your boards as well, because again, that just level of awareness for how much we know or how in touch we are with our revenue can be really important. But I know I'm already a minute over, so I am willing to stick around if anyone does have any questions, but otherwise I'm going to hand it off to Amanda.
Thank you, Jen. This has been really great.